Some men read Playboy. I read annual reports. That's Warren Buffett speaking. It's one of his most famous and funniest quotes. He might have said this playfully, but he meant it with absolute seriousness. Where others flip through Playboy magazines or chase the latest headlines, Buffett flips through companies' annual reports. He spends hours poring over financial statements, those dry-looking pages of numbers. Because to him, that's where the truth about a business lives. But why? Why would the man who became one of the richest people in the world care so much about financial statements and the underlying performance of the companies? To answer that, we have to go back to Omaha, Nebraska, and meet a boy with a knack for numbers. Warren Buffett grew up during the Great Depression. His family wasn't wealthy, and times were tough, but young Warren had an entrepreneurial spark. He was selling chewing gum, delivering newspapers, setting up pinball machines, always finding ways to make money. But he wasn't just interested in hustling nickels and dimes. He was fascinated by the stock market. At 11 years old, he bought his very first stock, Cities Service Preferred. And here's where the story gets interesting. Warren didn't just buy for himself. He also bought shares for his sister Doris. Imagine that. An 11-year-old, already responsible for other people's money. Warren bought the stock at $38 a share. Not long after, it dropped to $27. For an 11-year-old, seeing your money, and worse, your sister's money, sink by nearly a third was terrifying. He felt the pressure. Eventually, the stock ticked up just enough to sell at $40. Relieved, Warren sold. He had made a tiny profit. He could breathe again. But then something happened. After he sold, the stock kept climbing and climbing all the way to $200. Now, how many of us have tried this before? Like Warren? Leave a comment below and share your experience so that we can all learn from our collective experiences. Back to Warren, that event hardwired itself into his memory. The lesson: don't be shaken by short-term ups and downs, and don't let emotion take control of your decision-making. Warren realized that investing wasn't about guessing what the crowd would do tomorrow. It wasn't about being the fastest to buy or sell. It was about knowing the business you own and having the patience to let it grow. Stock prices can go silly and unreasonable, but if a company has a solid business that has a trend of making consistent profit in the long run, you can just sit on owning it, and short-term fluctuations can totally be ignored. However, if you don't know what you're doing, emotions will take over and make decisions you'll regret. That experience shaped Warren's investing philosophy forever. It could shape yours too. Now, how do you really know a business? For Warren, the answer became clear. You read its financial statements. Buffett came to see accounting as the language of business. He put it simply: unless you are willing to put in the effort to learn accounting, how to read and interpret financial statements, you shouldn't select stocks yourself. If you can't understand that language, you're basically like walking into a foreign country blindfolded. You hear noise, but you don't know what's really happening. Learning that language, that is, learning to read the income statement, the balance sheet, and the cash flow statement, became Buffett's superpower. It let him see what most investors couldn't. Let's slow down and unpack all this. The income statement tells the story of how much a company earned over a period of time. Revenue comes in, expenses go out, and what's left is profit. It's like a report card for a business's performance. The balance sheet shows what the company owns and what it owes. Assets on one side, liabilities on the other. It tells you how sturdy the foundation of the business is and provides a snapshot of the company's health. And the cash flow statement tracks the actual cash moving in and out. Because at the end of the day, profits on paper are meaningless if they don't turn into real cash. The cash flow statement shows how much real cash the business generates. The lifeblood of survival, When you learn to read these, you stop guessing. Buffett trained himself to read these documents the way others read novels or a detective story. To him, they weren't just boring numbers. They were a living story about whether a company had a strong moat, whether it was run responsibly, and whether it could keep compounding wealth for decades. Warren is like a detective spotting patterns and truth that are hidden right behind the numbers, and he enjoys doing so like solving puzzles. Now, fast forward to Warren as a grown man managing billions. Even then, the lessons from his childhood stuck with him. Think about the late 1990s. The internet bubble was inflating. Every new tech stock was skyrocketing, and that's the popular, trendy investments that got all the hype. Wall Street said, if you're not investing in these, you're going to miss the boat. And Warren? He did not take part. People criticized him harshly. They said he was too old, too slow, that he didn't get it. He was mocked for refusing to join the party. But Buffett had learned long ago, first from his childhood stock mistake, and then from years of financial statements, that hype doesn't last. The financial statements tell the truth. And the truth was that most of these hot new internet companies had no profits, weak balance sheets, and unsustainable business models. When the bubble burst, fortunes evaporated. But Buffett, he emerged stronger than ever. The same critics who had laughed at him were now asking how he saw what they couldn't. The answer was simple. He trusted the financial statements, the underlying profit-making ability of companies, more than human emotions to follow the hype and the headlines. Here's what's so motivational about Warren Buffett's story. Buffett wasn't always celebrated. He was doubted, criticized, and often even dismissed. But he had the courage to stick to what the numbers told him. And over time, the numbers proved him right. That's why his favorite holding period is forever. When he finds a company with consistent profits, low debt, healthy cash flow, and a moat protecting it, he doesn't need to sell. The financial statements keep reassuring him, year after year, that he's made the right choice. And here's the takeaway for you and me. You don't need billions to apply these lessons. You don't need to be a genius. What you need is curiosity, discipline, and patience. When you learn to read financial statements, you're no longer swayed by market noise. You stop fearing short-term drops. You start asking the right questions. Does this company earn consistent profits, even in various economic climates? Does it avoid drowning in debt? Does it generate real cash? Does it have a moat that will last? If the answer is yes, you can invest with confidence and hold on while others panic. Let's go back to that young boy in Omaha for a moment. He thought he was being careful, selling that stock early for a small profit to secure a small gain. He thought he was protecting his siblings. But what he really learned was that emotions, whether it is greed or fear, can make you miss the bigger picture. That early sting taught him the importance of knowing what you buy and the importance of patience. It taught him to look deeper than the trading prices. It taught him to trust the underlying numbers. And that lesson became the foundation of a lifetime of investing success. Today, Warren Buffett is known as the Oracle of Omaha, one of the wealthiest men in the world and one of the greatest investors of all time. But it all started with a mistake, with the pain of selling too soon, and with the decision to let financial statements guide him instead of emotions. Critics may laugh at him. The market may tempt you every day with hyped investment opportunities. But if you stick to the numbers and keep your patience, you'll discover what Buffett discovered. In the long run, truth wins out. If you are able to do that, you are truly investing, instead of just gambling and hoping for the best. That's a taster of the Buffett way of investing. And in future videos, we'll dive deeper into his approach. In this series, we're going to learn how to read financial statements just like he does. Line by line, principle by principle, until you can see the same truth in the numbers. The aim of this channel is to introduce these principles as simple as possible, in a way which I hope was available to me when I started learning all about this. So, join me next time as we dive deeper into Buffett's investing approach, the insights that transformed him from a young boy in Omaha who traded emotionally into the greatest investor of his generation. Subscribe if you haven't already, and give this video a like if you find it useful. See you next time. Peace.